Yeah, I have a slight cold slash flu. I'm not sure what it is, but at times I will probably mute for like 2 seconds. I'm probably sneezing or something, right? So don't pay that any mind. Sadly, right, I was not here. Like, to be honest, I wanted to be live streaming yesterday during New York session, but the life did not allow me to do that. I had to get my mom, right, to help me with my baby. So I had to get her from the airport and so on. Then I was like so tired, in the evening, just which actually was insane. Been tired, so tired for the past, I'd say 2 weeks. Busiest time of my life. But anyways, yeah, we'll be talking about what happened yesterday, and what happened yesterday is what will likely occur today, right? Because this is the thing that actually puts price in action or put the action in price action, right? This is it. So, I'll first of all, let me. This is the London session for the ES. Whenever the Dow is overextended like this, we keep our eyes on ES and NQ, right? We have news to be released at 8:30. Right, so at 8:30, we have USD high impact news events. Right now, we can see the countdown clock right here. 2 o'clock. 2 minutes. What am I saying? Got a dollar. Comparing it to the euro and the pound. So we have SMT between the pound and the euro at the highs, which is what caused price to drop like this. And more profound, we have SMT between the US dollar index and the euro. So on the euro, we have a closure which occurred here during New York, which closed above this closure right here. But here we can see that price actually traded below this low and below this one and closed as well. So I guess I'll just wait for the news to be released. I'll more than likely be here for an hour or so, or maybe even more. There's the news. Where does it close though? Let's see. So there we have it. For so far we have But so far we do have sequential SMT here, but you know, we have to, if we don't get one here, like between this 90-minute cycles quarter and this one, then there's nothing to do. You know that we need to wait for two. And there's this. The 5-minute time frame, so it's just a wick, right? So you guys just took from what we just said, or what we highlighted was this low, right? The hell, this low right here, and this one right here, and basically that's it. So whenever we have SMT, right, prior to a news event, and we have that low being wicked through, price will be usually is propelled in the opposite direction, right? Because if you guys remember, right, what we talk about when it relates to our comes to these lows are that they are not symmetrical, therefore liquidity rests below them, right? They're not symmetrical, therefore liquidity rests below them. And here we have, due to the fact that we have price trade below here, trade below here, that instigates that, that was an actual market structure shift, right? So here, right, the only reason why, we would find something to do here is, based on the US dollar, right? So we go to the daily quarters, see if we can find it. Not, we'll be able to find it in the, for some reason, the indicator does not show the daily quarters here. So we'll just use the euro for the intermarket sequential SMT. Or, just to show a liquidity grab. So here we had price trade above here, this high, right, which was London's high. Here it didn't do that. So this was intermarket sequential SMT. Whenever a news event, right, and you gotta listen closely to this one, right? Whenever a news event causes, sequential SMT and there is not a closure, right? That is sequential SMT. So there are two ways that it could happen, right? It could be, prior to the news event where you'd see price trade above this high right here and close, then, trend down. Then more than likely the news event will just, push price in a straight line. But when there is no intermarket sequential SMT prior to a news event, then you can expect price to wick above a high and cause sequential SMT. Whenever a news event, puts the liquidity run underway or pushes it above a high and leaves a wick, that is sequential SMT. For and let me say this again, for a how would I say? And you'll see an example of what I'm saying right now. We'll show that soon. But whenever we have price push above and close before a news event, trend down below the high, the news event will more than likely send price in one direction. Let me say this again. This is the London session. We highlighted these highs before, right? They were not symmetrical. We talked about them, right? Price ran above this high during the news event. The news event pushed price above this high and left a wick, right? So price does the news event, does one or two things to price, right? It pushes it above a high, then allows it to be rejected, but this will only be occurring whenever there is sequential SMT. And on the other hand, if price already showed sequential SMT, right, and it's trending lower, then what will happen? Price will just continue in a straight line. This was liquidity, right? But it was not, deep enough. Like, for example, you would want to see price actually, push above, and it would be so obvious that that was a liquidity run. Like, for example, here, right? You would want to see price push above here and stop right here, then reverse, just as how it happened right here. So this right here, this is good. And the next drawn liquidity is more than likely these highs right here. This alone is very, is amazing. But the better trade, like the best trade, like if I was supposed to take any trade this week, which I did not trade yesterday, sadly, because I was so busy, like literally so busy, it was insane. But yeah, anyways, the trade that was so perfect, right? It was a two-stage sequential SMT, which whenever there's a two-stage sequential SMT, right, and that's very specific, right? That's very specific. Two-stage sequential SMT means that you have sequential SMT between, whichever cycle you're working with and with the immediate lower time frame cycle, right? Sequential SMT in real time. So for example, here, at these highs, right? This was hopefully one day when I'm here, we get to, see something like this happen. All right, so here we had sequential SMT, like just like what we saw happen here, right? And we see price gravity into that high anyways. So here, right, we had sequential SMT between the London and the New York session, right? And this was yesterday, right? So this was the London session. This was the New York session, right? You can see it being, delineated by these smaller, rectangles right here. Red, London, green, New York. Right, so we had sequence SMT between these. And then afterwards, what happened again? Then we had sequential SMT while price was above this high right here. And this is how liquidity is induced. Right? And before we talk about here, right, I posted something, where I said that for price to actually be in a premium, the high that you are working with, right, must be above any high that was formed in the previous higher time frame cycle. So for example, right here, this was Wednesday, right? We must be above any high that was formed on Tuesday for this to actually be a premium. And when you're in a premium, it's not just, okay, we're in a premium now. So Wednesday is, for example, you're here and okay, we're here or you're here, but price is above, Tuesday. Tuesday is high, or the highest price that was, printed on Tuesday. So now I'm going to just sell. No. You need to wait for sequential SMT to happen. Right. And the best times to trade will be either the London, the New York, or the afternoon session. Right? The Asian session isn't the best time to trade. So here, and it's so clear cut, and I know that I believe that a lot of people saw this happen, right? Or, caught this. But anyways, here we have price trade above this high. This is London's high. Here, it doesn't trade above London's high. And then what would allow us to take a trade here? On the 90-minute cycles, right? We had sequential SMT between the second quarter of the New York session, which the high is here, and the third quarter of the New York session, and the high is here. Mind you, right? And this is why, I believe that, I don't remember if I actually talked about this in the previous live stream, right? But you want to see for the highest probability trades, and you've seen this happen over and over and over and over again, right? You want to see Q3, 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 just as here. And here, this is why I say that this is the best time to trade between 9 to 10:30, right? Because that's when this high was formed, right? It was formed between 9 and 10:30, literally in the center of that time. There it is. So this is the, like, literally, once you have this time in mind, and it goes for the other days as well, right? It's not just Q3, Q3, Q3. It's actually Q2, Q2, Q2 as well, right? So price trade about this high, there is, listen, it's pretty clear cut, right? You have price trading above this high as well, right? So there was turtle soup, then turtle soup again. But it was sequential SMT which made this true. Here, what's here? Failure swing. That's a failure swing, right? So we had two failure swings here in the S&P 500, and then we had price run above this high, then above this high right here. Once we traded, if you're too scared to get above here, to get in here, and you need to be using the 50-minute time frame. Why? Because you're trading the daily cycles. What does that mean? That means you want to get in at the high of the day or near the high of the day. And you must be trying to short in premium. Right? For example, if you're here, you're trying to short here, you're going to get taken out. You don't want to be shorting in, discount prices. Right? So why is this premium? We are above any price that printed on the previous day. Right, and if you're trading the 50-minute time frame, that's how you should be looking. And if you're trading the 5-minute time frame, you would want to be above any price that was printed in the previous daily cycle. Which means that if you're trading in the New York session, then okay, I need to be above any price that was printed in the London session. And that is true premium. But it all starts from what? You know, paying attention to the higher time frame cycles. Right? We are at the last quarter of the month, which does not normally give you the best price action. So even opening my charts yesterday and seeing this, I was, so I was like, wow, that's good. And this was actually perfect, right? And I wish I had caught this because it was so perfect. But we move, and next week I'll be more active during New York sessions, right? For the past 2 weeks, as I've said before, life just happened, and yeah, that's just it. So again, right? Hopefully you guys can see this right now. Let me try to highlight it even more. And if we had, the parent sequential SMT, which is the higher time for sequential SMT, which you would be looking at. For example, it doesn't matter if this happened on the monthly cycle. It doesn't matter if this happened, using the yearly cycle. It doesn't matter if this happened using the quadrennial cycle, right? When did this happen? Like, no, we're just looking between these pairs, right? This happened between the daily cycles, right? So due to the fact that this happened during the daily cycle, what type of trade did this create? An intraday trade. Not a trade that you will hold for the entire, week, but a trade that, you can hold until you get satisfied until the end of the day. Also, again, right here, we had price trade above this high, which was the high of the New York session, right? That created sequential SMT as well, right? So at this high, sequential SMT reverse. Then here, sequential SMT reverse. The thing about this sequential SMT is I don't believe that there was any lower time for sequential SMT. But whenever that happens, right, what could cause price to reject? If we have, for example, a daily new day opening gap or a new week opening gap here, which we do have, right? So this is how you would see a real breaker, right? The breaker would be here, this low, overlapped with the new day or new week opening gaps. Right? So price left this low right here, traded here, created sequential SMT, smart money reversal. We broke below this low. There is a new day opening gap here. Price trades here. Do you short here? Yes. Why? Sequential SMT, and there's a new day opening gap, overlapping right here. Right, and there we still have price trending lower. Right, and remember what we said. Once you see that there is no active sequential SMT here, price will more than likely trend lower, and it is. Here we have price reached or drawn liquidity right here. So we have price trading above this high right here already. It's actually perfect. Right, so remember, this is what the New York session What is this? The London session, right? So these are the times when you have, you know, the kill zones actually working, right? Whenever we have this, right? And this right here, what is this? This is intermarket sequential SMT, right? So you can either compare this market, right, to the futures chart or the interest rate charts. For today, I'm comparing it to the futures market chart, right? The euro, the pound, and the futures, right, which are the S&P 500, Nasdaq, and the Dow, they should be moving in the same direction at all times, right? That's normal price action, right? That is normal price action. Whenever you see any of them out of sync, for example, you see the euro going down and you see the Nasdaq and the S&P 500 going up. That is not clean price action. This right here, this is clean price action. The fact that during a news event we had price trade above these highs right here, this high, wick above this high a bit. And then we had the US dollar trading below this low, the low that we highlighted, right? And above this high, the high that we highlighted, and above this high as well, that we highlighted as well, causing what? Intermarket sequential SMT. So to the normal person, there is no SMT here, but we can see it, right? And this is why I said that I was waiting for Thursday, right? Now you see. Now you see. What type of price action is this? Right? This is definitely bullish price action. This is not bearish. So let's go to the daily time frame. First of all, these lows right here are, very suspect to me, these highs as well. Like even before we had that, that news event which caused, manipulation, which put price in the direction that it currently is going. Right, I already saw these highs. Right, I already saw these highs. These lows as well. These lows as well. Right, and this is the 4-hour time frame. Tuesday, Thursday. So the Nasdaq, I'd say to draw liquidity, these lows right here, just without even thinking about it. Currently 8:55. Nice. We're up early today. So also we had sequential SMT, on the weekly cycle, whereas we have the high, we had the what's this, the high of the week, right? And let's focus on the Nasdaq for now, right? The high of the week was Wednesday, right? And today's Thursday. The high impact news event just managed to, push price lower. So we have intermarket sequential SMT between the forex the forex triad and the futures index futures triad, right? So we traded below Wednesday's low, which was here, right? Traded below it here, right? We traded above Wednesday, right? Wednesday's high closed above it, shifted lower. I cannot. Like I can't not see, price gravitating to these lows right here. It's too choppy, and there's a lot of liquidity resting there. We might end up seeing, a setup that we haven't seen in months, right? Literally. So now, mind you, this is the 4-hour time frame. Right, so we got our drawn liquidity, which was first it was this high right here. So what would make this obvious, or what would make this even better, right, would be if we had, the forward time frame close and form a gap here. Doesn't really have to, but that would give you something to work within in regards to the 15-minute time frame. So we foresaw price going to this level, right? Even prior to the news event, price took out these lows, right? If you look over here, which we didn't even have to highlight, right? Due to the fact that this happened, things like this do not happen where there is not a higher time frame level to support it at times, unless we're at all-time low, all-time highs. Also, right, it's Thursday. And what are Thursdays known for? Reversals. Right? It's Thursday and it's the last quarter of the month as well. So this sequence, right? And I'm not sure if anyone has been paying attention, right? Hope that you have been. Right? So the higher time frame cycles, right? And this has nothing to do with, sequential SMT or anything like that. This is just that, it's the last quarter of the month. It's a Thursday. So on the lower time frame cycles, what would you look for in regards to sequential SMT or intermarket sequential SMT? What do you look for? You would look to see a cracking correlation between the days of the week or between the 90-minute cycles. So all the moves for the morning already happened. So I hope that can you guys hear me now? Is the audio good now? Probably lost you guys for a second. Okay, it's good. Nice. Right, so this is the 1 hour time frame. Right, we'll wait to see if there's a gap that forms here. This high right here was Wednesday's high. This low right here was Wednesday's low. We have price trading above this high right here, right? And not trading below this low right here. Is this bullish for the euro? No. You would see this as a market structure shift, right? Why? We're in premium. We had sequential SMT here. You don't use sequential SMT in the middle of the range, for you know opposing price action or for reversals. You don't short here, you don't long here, you do nothing when price is within the range. Price goes above, that's when you look for shorts if there's sequential SMT. Right, so you should always be focused on being sure that you're within a premium market. Right? Also, we had monthly bullish sequential SMT here for the in regards to the US dollar. But due to the fact that we saw this large price swing right here, right, which covered like basically almost 100% of the monthly time frame, right? If and yes, the euro is still bullish, right? The euro is still bullish, and the not the euro, the US dollar is still bullish, and the euro is still bearish, right? As you would expect it to be, right? And everything is still, in relation to that. But even if, right, we had, for example, no sequential SMT here, but on the lower time frame cycles, we had a two-stage sequential SMT, right? We would still consider that. So focus on the how this close. If it closes and forms a gap, right? I actually hope that this was insightful to you guys. So long have I been, talking right now? And I don't want to just keep going and, because like reading price action, trading overall, it's not something that is, well, it's not something that should be accepted, right? So I think that the thing that I will be doing is, being here whenever we have high impact news events, or whenever, we have sequential SMT underway. The best way, right, to do this, and if you're not doing it this way, you're going to get it wrong, or it will be harder for you. There are a lot of ways to do it, but the best way is using the two-stage sequential SMT, which is if you're trading the weekly cycle, you have sequential SMT there and within the daily cycle. So, for example, you would have sequential SMT between week 2 and week 3. Then you have sequential SMT between the Asian session and the London session. I'm going to end this stream right here and then start another one for questions, because, yeah, give me a second.